the last breach of the 200 SMA on the weekly chart was in 2011. Even then, like it bounced, kind of chopped around for a second, then bounced off. So that's been really the line in the sand for long-term traders that are playing like bigger term trends since 2019. Since I had a full head of hair and I wouldn't say like abs, but like like in the proper lighting. And if I shave my chest hair properly, like you could see like the hint of one. That's the last time the market has breached under the 200 SMA. I was thinking today, I was hoping for a small gap down. I was hoping for a small gap down into this 200, and then frankly, I was ready to put my balls in the vise and make a shot at this, but we're just not. We breached it by too much now. We're going to gap right up under this. So now at this point, this also could become resistance. So two things to do. The market's going to limit down. If we remount back over the 200, that's 264. That's the area that I'm going to really pay attention to. As we know, these things are significant, right? Because when you're going back like a decade, that's like when we started our chat room, So I think that's going to be something to just keep an eye on. The Nasdaq's got much more room to fall. You can see here, it hasn't actually tested its 200 SMA on the weekly. I can't really see ever since I've been watching this thing. Since 2010, we are kind of like at the lower Bollinger Band and stuff. You got to move out to like larger term time frames when you're kind of thinking about the markets, when you're in this kind of pandemonium. And that's what, is happening right now. There's a lot of fear in the air. I don't know. I'm not sure I completely understand. I saw like there's like 8 people dead in the U.S. or something like that. And I don't know. That's not my thing. I just don't know. I'm not a doctor, so I don't know the nitty gritty of it. But this has been a very, very fast descent. All we can do is really play levels, right? We can only play levels. RCL, CCL suspending operations. Good Lord. So you can see here, this is where there's 2 lines in the sand that we've got to be aware of. 180 on the QQQs. That's going to be some support here, okay? Big support. Then we look at the 200 SMA on the SPY, all right? That zone over here. Those are going to be the 2 areas that we want to watch. Now, let's be honest about one thing. We saw this in 2008. Supports don't mean shit when the selling comes in fierce. Support means nothing. Actually, supports often become areas to short. So you really want to watch the short-term price action around these areas before you come in and try to just make a play. So essentially what we're doing is we look at a level, then we start looking at shorter-term time frames, and then we want to see how and what the price action is around it. On a shorter-term time frame, we look for signs of roundings, and then we can make the play, all right? Till that happens, we just don't do nothing, all right? We don't do anything, and you can't short into the hole either, right? So like the market's going to open down 1,200 points. So you don't want to be shorting necessarily in the hole. So there's 2 aspects of things. If we start to see some signs of a potential short squeeze developing, we will take it for a quick trade, but then at some point we'll probably flip it, meaning, then you just lean back short. What I mean by that is every day, since I can remember, there are spots where like the market starts to reverse. We were looking at this in the chat room, right? You're like, okay, the market's going to come up and reverse, and then it just runs into resistance and it flushes down. And then like you can see, like you start to build, you can pop over the VWAP for a quick second. You think, okay, here we go. We're going to reverse, and then boom, flush down. And we've seen that like quite a bit, like every single day. Like the market opened up strong a couple days ago, looked like it was going to break out, and then we flushed down. And then even a few days before, this is, I think, the playbook because that we need to see. This was the limit down day. So if you see on the limit down day, the last one, so this would have been, what, Monday? We got a nice squeeze. We got a nice squeeze into the EMA. So you're thinking like, okay, here we go, squeeze. And then end of the day, like this stuff fizzles out. So that's kind of where that's the playbook that I'm monitoring. Is, okay, we're going to get the big gap down. We'll look at shorter term time frames for the squeeze. If we get it, we will take it and trade small. All right, I'm doing like, I would say today, 1/3 size. We've been doing half sizes at the open late, for the last like week or so. Meaning normally if you trade 1,000 shares, you do 500 shares. I'm thinking about 1/3 size today. So normally like I like to trade this TQQ, for example. So I'm just gonna lay this on the table for you guys so you guys don't fucking go balls deep on stuff. So I like to trade this TQQ. Right now, this is the easiest, I think this is the cleanest, easiest thing to trade. I'm going to probably stay away from TVIX at the open. It's too expensive now. So, say like this is what we call like a range break. So if we get a gap down, which we're going to get, right, a monster gap down, I will look for a range to set at the open, 3 candles. So just don't get in first tick, right? I made that mistake a couple days ago. And then it was like, I had to sell because it looked like it was going to tank, and then it reversed. So that's the move I'm looking for, but at some point we'll have to, if we get a nice squeeze, we fizzle this thing back out, all right? So just kind of be mindful of that. So my only 2 watch lists today, I got UVXY. This is the volatility instrument. We could trade this back and forth. It's getting, this TVIX, I think, I'll be watching this one too. I think this one might have too much range for a lot of you guys. This thing is $40. It's going to be at 360. The intraday range on this could be, it could be $200, 200 points back and forth today. So it's not an easy trader because the price levels are just getting so high. So if we need to trade volatility in the VIX, I think you'd go with UVXY. It's a little bit cheaper. It's a little bit less leverage than TVIX. Unless you're very quick like Patrick, who's just got that skill that he's developed. You probably want to stay away from the TVIX and go with the UVXY. So this is, if we got to short the markets, we long this UVXY. We got to buy the markets. We'll play this TQQ. And I think that's the easiest way to go about this. This is going to be, both types of, this is going to be very, very tricky. The other thing you may want to do, if you're a swing trader, if you're a day trader, right, we're just flipping back and forth. If you're a swing trader, you just make lists. Like today's a day you make lists. So what I mean by make lists is you sit down and think about, all right, like when the market gets to like specific levels that I may be looking at, if it gets into areas that, I may want to do some type of longer term holds, you make a wish list. Like I got a wish list here, like MGM, right? This is like, right? Everybody's been to the MGM. So like I know, like, okay, where are the support levels? Well, all of 2009, 2010, like this thing was at $10. So like that could be something if it starts to get down into those levels. I would potentially look at it, So it still needs a little bit more destruction. Same thing, like win, right? If this thing gets down into the 50s or something, maybe I take a look at it. So like come in and do, you build wish lists. So it's not like you just take the day off if you're a long-term investor or a swing trader. You're spending your time looking for things, looking for levels, and just building out wish lists. Like, for me, like, okay, like Apple's going to probably open at 50. If you look at Apple, it pretty much always bounces off its 200 SMA on the weekly, at least for the last like decade or so, So my wish list is if it could get down here, that'd be huge, but that's a far drop. I may, think, okay, what if I may start looking at levels like at 230, and if 230 doesn't hold, then I go back. So you just want to make some wish lists and really think about like, all right, where are some levels that I can appreciate, that would be feel comfortable, looking at things, but you can see this thing is getting demolished. So moral of the story is today, you trade 1/3 size at the open, don't blow your load. The market's been giving us the real move at the close every single day. It's the close, like from lunchtime on, that's where you're getting the real move. I made this mistake yesterday. Yeah, I've been really good about it the last couple of weeks. Made the mistake yesterday and just kind of dicking around at the open. Then I was like, fuck this. I'm taking a nap. I'm going to catch a nice beat. And before you know it, like the market was tanking. And I didn't have that mental capital available to come in and shred it at the close. That's just the way it goes. So today we want to do really, really small size. Look at this Carnival Cruise Line. I think that and RCL they suspended. Well, they suspend operations or just for 60 days. So both these are getting smoked. I was actually looking at these maybe for some investments, but in hindsight, now that I've been really thinking about it, I got to look at the debt loads on these things. The problem is if you start to like really get into, if they're carrying a lot of debt, then, and you shut down operations, I mean, you're just so shit out of luck on stuff that, you don't really have anywhere to go. So that's the thing that you're going to see. If you look at the debt rate, anything in 2008, the stuff that ramped the hardest in 2009 was like the high debt plays because they're like essentially leverage. But if you think about like what fell the most in 2008, like the first things to always go are companies that have like really high debt. So that's like oil companies get smoked the most. Because they always carry a lot of debt because it's like a labor-intensive business, right? You got to carry a lot of debt. I mean, if you see like some of the oil stocks that we used to trade, I mean, these things like, right, this thing's at 40 cents, like, SM, man, me and Zaman, we used to shred this thing like for years. We just traded this thing back and forth, $1.69. Amazing, right? So that's where you really want to kind of go with these is like, if you're looking for like stocks that are just going to crater, look at anyone with like really high debt. So those are always high debt companies are airlines, casinos, right? Hotels, those tend to be like very, very cost intensive businesses. Like if you're like a software company, you don't really have like monster cock debt loads. So that I remember like in 2008. That was the whole ball game. That was the whole ball game. So let me see, like, so you got like, if you think about like debt, see the debt to equities ratios on these things. Long-term debt to equity since it's like 99%, right? If you go CCL, 38%, which is still quite a bit. So these are companies that get smoked the most. Let me see. Carnival Cruise Lines. Auto companies tend to get smoked very, very bad in these kind of things. Like, man, they have so much. Look at it. Ford's got 281, right? Debt to equity. Essentially, like what that means is, right, their balance sheet has like almost no cash and like just like probably tens of billions of dollars in debt. And you see these auto companies. Yeah. So those are all companies you could put on watch for short, but I think the easiest thing to do really is just we trade these ETFs and let things go, and just start watching the levels around here. See, this TQQ is going to be right at 49, is like right at that 200 SMA. So we can see here this thing's been holding for a little bit of time too. That's the cleanest part. If you're brand new to all this, don't even worry about this, man. You just chill out for a little bit. Chill out, or you can just watch me in the chat room. I'll be on video all day, guys. Don't worry. So I'm on video all day. I'll be guiding you guys through all this per usual. Garrett, you know that. I'm like the only person that finds myself funny. This Boeing, look, the one thing with Boeing is like I would look at this for a potential investment, but if you really look at this is like a long-term. We call this back in the day. We call this like see like you get this like kind of rollover and you got the middle finger over here. So back in the day, like we used to call this the infamous, the infamous cock and balls pattern. This is the this is the infamous cock and balls pattern. Where you got like the big middle finger coming right up on it. So when you have that and you like break this neckline, I mean you can really fall for a bit. Now it's been cut in half, but you can see here like Boeing probably you're gonna get back to that support from like 2013, 2017. It based for years. But frankly, if it doesn't hold there, that's going to be where it tests, then you're getting this thing down into 79. That's when maybe you start to look. For those of you guys, you degenerate small cap lovers that need the action today, you can probably come in and trade this junk APT back and forth. You can see like nice gap on this one. That's a virus play. They do the masks. Not face masks, like the ones that make your skin young, but the other kind of mask, right? It's not like a nice clay Dead Sea face mask that would make you feel nice and warm and fuzzy. It's the other kind of mask. This Codex has some heat on it. You can see here, you're breaking out of the flag, and then this 15 is going to be a little bit of resistance here. Once we come out of those, you can see, whoa, look at all that, right? Once you start, now you're coming out of that, that's where you're going to get some action on this. It was up 97% yesterday. Man, we screwed up a little bit, right? We had this thing for the flag. I had this thing we had this thing for the breakout. Man, it popped like $1, and then it was lunchtime. I sold it. It just pulled back to the trend line and exploded. This thing owes me $4 or $5 grand. Look at that thing. So this thing moves actually pretty well. Yesterday it was really clean. The volume was there. 56 million shares in volume. The float's only 8 million shares. So what that means is, right, you got a very limited amount of supply. You've got big volume that pushes in. There's only 8 million shares that can be traded on the total market, but you had 56 million in volume. So these things can go nuts and they can start to go parabolic. In the past, we've seen these kind of names like go, so look, it went from 3 to 20. So we know that this thing can move, like in a matter of days, it can move up 300, 400, 500%. Yesterday it was up 91%. AHPI is another one. Check this out. So you had this move from like $1 or $2 to 40. Now you pull back to the 20 SMA, which doesn't mean anything in itself. But you remount to the 9 EMA yesterday. So it's a breakout remount play. Remount plays are very, very powerful. Now we're starting to get a little bit of an early morning push, and it's starting to move around. Watch this thing. If it holds over the 9 EMA, which is like 14, you may get a shot at this later in the day. Now the issue with this one, does anybody know the issue on this one? The big, fat, hairy Indian butt of this? The volume stunk yesterday, so the liquidity stinks. In a bear market, when the market is crashing, liquidity is everything. Liquidity is everything. 2 million shares on a stock in a market that's crashing, that's about as liquid as your home. Like, you can barely get out of this thing when you need to at the price that you want. So you gotta, I would almost go in at that point, right, with the Codex, because you're gonna have more liquidity, APT, I notice, is like the easiest trader of the group. It moves usually, but it's got a little bit of a spread. And then this INO is another one that, you may get a dead cat bounce on this. Now, let me tell you, I've been trading this INO stock, back and forth for like, almost a decade. It never does. It gets a pump like once every couple of years, and then it just downtrends. I mean, it's a dead stock normally. It'll just sit around and then pump for a little bit and then die down. So most, you can see here, see this big, it went from 20 to 5. So this is a pump and dump stock. When you see candles like that, There, when you get the upside, we call those the mega penis candles, but to the downside, I don't even know what those are, right? We just call that pain. So that's a pump and dump. That's a pump and dump kind of stock. So if this thing runs, like you can day trade this thing back and forth, but remember that at some point, this thing will roll back down, because when you see candles like that, you know, that's not really a stock you want to be holding for more than, for more than a few minutes. Good. Game plan for today. You know, space is something too, like the old breakout spot was 12. You know, this is a tough environment for a stock like space. Why? Space doesn't make any money. Space doesn't make, I don't think they have any revenues, right? So it's a tough environment for a stock like space. There's two types of stocks that get just shredded in this type of market. Ones that don't make any money, that were like just high flyers based on speculation because the market was hot. You know, when the market's hot, you can throw a dart at any juicy turd with a cool story and be like, wow, like, hey, they're sending people to space. So like, well, when the market's hot and everybody's flush with money and somebody says, man, we're sending people to space, you're like, fuck it, I'm buying. Yeah! But, you know, when it's a zombie apocalypse and people are running around with face masks and cowboy hats rocking their Ugg boots, then all of a sudden people are like, I don't want to go to space. I can't even get toilet paper. And now you can't get the damn toilet paper. And you're thinking like some guy's like, hey, I'm going to send these people to space. And you're like, man, I'm wiping my hands with my fingers and washing them with just regular water because I don't want to waste my soap. You know, that's when the stocks like space go and get cratered. In India, we always called it wipe with your left, eat with your right. In India, they call it wipe with your left, eat with your right. So, and you don't want to cross hands. So, like, if you ever see an Indian person, like an official Indian person, like in my family, if you ever see them, like, kind of sniffing their left hands, that's how you know. My first time to India when I was a kid, you know, my grandfather didn't have, you know, they don't keep toilet paper at the house. You use bucket and water and stuff. When he whipped out that bucket, and I'm like, what you want me to do with this thing? He's like, after you go to the bathroom. So, man, I was wiping and scraping with my right. My fingernails were too long, and you can imagine what was happening. So the next thing you know, I got long fingernails. I'm wiping with the right hand because I can't go left. I can't go left. So I'm wiping with my right, scraping. I got my fingernails too long. And then like an hour later, I got to eat lunch, and I'm like slapping everybody high fives on the street. Because like everybody in my grandpa's town, they know me because I look like my grandpa. They're running around giving me pandas, which is like an Indian sweet. And I'm like, thank you. And I'm eating these pandas with my right hand. I'm slapping everybody five. Nasty. It was very, very strange. So you don't want to do any of that. So moral of the story is, I forgot. Oh yeah, space is going to be tricky. Because when you think about space, always remember, wipe with your left. Eat with your right, and you're going to be safe on space. If the market does reverse, space is going to catch a wicked, wicked bounce, though. I will say that. Space is going to catch a wicked bounce if and when the market reverses. It will get a wicked bounce. So it's at $40. I mean, you got a nice deal right now, but a deal can get cheaper, right? You ever go to an outlet mall? They got a nice deal. It's 50% off, and then they give you another 50% off like 2 days later, and you're like, 50% off 50? Doesn't that make that free? But it's not. Who knows? I don't know. I'm not a mathematician. I'm not a math magician. I'm just a simple man trying to make a dollar in this day. Let's see where we're opening up. We're at 182. We're going to open up right into the supports, guys. Right? These are the areas that we need to be watching. So we're going to open up into the support. Don't be surprised if we see a little bit of squeeze at the open, and then we do the playbook, all right? Look, if we get The last time we had limit down. Let a range develop. Watch for the opening squeeze. And you know what? If it keeps going, it keeps going. But at some point, if it starts to run into the EMAs and start to fizzle out, then we'll go and be short. We're gonna trade this thing back and forth. I anticipate being long and short like 5 times today, maybe even more. So that's what we're gonna have to do. Main watch list, TQ2, so 3x ETF for the Nasdaq, and then we will have UVXY, and then just. You don't even need individual stocks right now, I think, because they're all just going to move with the general market, like this Amazon's in range. So we don't even need any of this stuff. Guys, trade safe. I'll be in the Discord room, doing what we do. And I'll make sure to try to stay as long as I can. But I'm going to be honest, if I shred a few $1,000 at the open, then I'm taking the rest of the day off to, watch coronavirus memes and, shit like that. There's some really good coronavirus memes on Instagram right now. So probably spend some time doing that. I like to share them with my sisters. You know how it goes. Be safe, guys. And always remember, eat with your right, wipe with your left. Use the ETFs. Trade 1/3 size. We're all kind of like making fun at all this just because that's sometimes the only thing you can do. But just be safe. Trade small, or don't trade at all. You don't have to. There's always time. This is like, I'm a degenerate and I've been doing this my whole life. So I like, I'm going to trade this market because that's just what I do, right? This is my job. But for like a lot of you guys, if you're just brand new, don't think like this is the time to go out and make a bunch of money. When people see volatility, you always think like at the end of the day, like, fuck, I could have made so much money, right? Like you see something like this TVIX or something, you in your head are like, oh my God, like I could have made so much money. No, what happens is when the market gets this volatile, the range gets so big, you get stopped out a lot. It's more stressful. It's not as easy as you think. People make their big bucks in trending markets, right? Where it's just easy. The market's just trending to the upside and everything is working. Everybody, right? You could have like your neighbor who could be just like a big, giant, smelly jerk, right? Like just crushing bruise on his head, probably got a pickup truck, wearing wraparound shades, and even he's making money when the market is going up because you can literally just throw dart and all of a sudden, right, like some shit stock like space is flying to the moon. In this type of market, it's not easy. You see the range and you're thinking like, wow, I could have crushed this thing. Not necessarily, not necessarily. I took a loss yesterday and the market trended all day. Go figure. Why my entries were wrong? All of a sudden I hit my max loss and then you're good to go. So let's do this right, guys. I'll be on the video and we're gonna make this thing fun. As always, God bless the United States of America. Let's get the music on. You know what we gotta listen to? A little Bruce Springsteen. We're gonna get the music on. We going to sing one for America. And we're gonna make this thing right today. Let's do this.